PEIR framing. Best phrases for confident LP briefings. In private equity investor relations, how you start the conversation matters as much as the numbers you share. Good framing sets the tone and controls investor perception, helping LPs quickly grasp whether an update is upbeat, cautious, or neutral. Before diving into facts, framing clarifies intent so listeners understand whether you're informing, reassuring, or requesting action. Framing also helps manage risk, upside, and expectations by highlighting what you're optimistic about, what could go wrong, and how you're balancing the two. Think of framing as the lens through which every subsequent figure and story will be judged. When preparing an LP briefing, aim for 3 core framing goals. First, build credibility and transparency. Be direct about assumptions, methods, and gaps so LPs trust your signal. Second, highlight value creation and mitigation actions. Show where you're driving growth or cost improvement and what steps you've taken to reduce downside. Third, guide LP attention to what matters most. Don't overload with noise. Flag priority themes and the decisions you want investors to notice. Together, these goals keep briefings concise, trustful, and action-oriented, which LPs appreciate in busy update cycles. Open briefings with a tight, top-line frame. State the thesis, time horizon, and current status so LPs instantly grasp the update's purpose. Preface any numbers with a qualitative signal. Label progress as early traction or transitional to set expectations before details arrive. Always link the current update to prior commitments or milestones so LPs can see continuity. Reference last quarter's target, a promise from management, or an agreed remediation plan. This context orients listeners and prevents surprise reactions when you present the data that follows. When presenting results, follow a clear pattern. Quantify, then qualify. Start with the metric, revenue growth, EBITDA, IRR, and then explain the drivers behind the number so investors understand cause and durability. Use comparative frames like versus plan, vs peer cohort, or trend over time to give perspective. Is this a one-off spike or a sustained shift? Avoid vague descriptors. Prefer precise terms such as net realization, IRR drivers, or AUM movement, so your audience knows exactly what you mean and can evaluate performance rigorously. Be explicit about risks and immediately follow with solutions. Name the risks succinctly: credit stress, customer concentration, regulatory lag, then present concrete action steps to address it. Use a simple structure: what we see plus what we're doing. For example, what you observe in operations and the remediation tasks underway. Always provide time-bound milestones and success indicators so LPs can judge progress. Milestones like target margin restored, refinancing closed, or market re-entry, and the metrics you'll use to declare success. Choose language that balances confidence with candor. Use phrases like, "our view is," or "we expect," to appear decisive yet accountable. For measured caution, use calibrated language such as near-term volatility, longer-term thesis intact, to acknowledge headwinds without undermining conviction. Reassuring language matters. Say, "mitigations in place," or "reserve redeployment planned," to show active management. These phrasing choices help keep LPs comfortable. They show you recognize risks, have a plan, and remain focused on outcomes. End each briefing with clear, actionable closing frames. Summarize the implications of the update and state any investor asks plainly, whether it's approval, patience, or increased reporting. Offer structured follow-up options, deeper data packs, a Q&A session, or governance steps for additional oversight. Finish with a forward-looking marker and the timing of the next update so LPs know what to expect and when. A firm close converts information into decisions and keeps engagement constructive between meetings. To recap, always frame before facts. Set the context, tone, and priorities before sharing numbers. Use clear structures across updates. Quantify, qualify, remediate, present metrics, explain drivers, and outline fixes. Finally, close with concrete asks and next steps so investors leave knowing what you need and what comes next. These habits build trust, reduce misinterpretation, and make your LP briefings both efficient and effective. Practice these frames, and your updates will feel clearer, more controlled, and more persuasive.